Hello, we're back, and I want to talk about job costing. In the last chapter, we talked about fundamentals of costing, and we talked very, very high level. My hope in this chapter is we're going to isolate job costing on its own, and we're going to talk about that. Again, this chapter really is an extension of what we've learned, I think, in Management 200. So I'm not going to introduce anything new, but I will expand on some of the things that we've learned in previous courses. So let's first get our objectives out of the way. We want to know what a job is. We want to understand how to assign costs for a job. We want to talk about overhead rates and how to allocate costs based on that. We're going to also talk about applying costing methods for service organizations. And again, we're going to talk about what's the difference between jobs and projects. I suggest in this chapter to truly take your time reading it. Why? Because it really is a good chapter. It's actually a very intuitive chapter, but it's also, you can use this in real life because you can take and assign costs in your own personal life. And when I talk about accounting, I really like to try to make it real and practical for every day. Not because accounting can be practical, not just that, but when you're learning something and you can actually use it in your own personal life, it really makes an impact and you learn it and it's part of who you are. And so when I talk about accounting, I try to find ways to incorporate it into a everyday scenario that you and I as people can think about and maybe make changes in how we do things. So we have to think about the job. Now, for example, a job for us would be going to an employer and doing our work and getting a paycheck. I don't want to look at it from that vein. What I want to look at is, here is an organization and they derive their revenues by specific jobs. For example, if you and I are a consumer and we go to Lowe's, for example, and we say, Lowe's, I want you to come in and I want you to recarpet 1,200 square feet of my first floor of my house. And Lowe's, will consider that a job. For them, it's a specific job. It is, and the reason why I say a specific job, because most likely a job is going to be something very, very unique to that particular client, which is why job costing is a little different from process costing. It's different in other ways, of course. But so we can take that job and we can assign costs because we know it's specific to a customer called D. They want carpet, which is materials, and they want that carpet to be installed. That's their job. So Lowe's has to compute, well, let's think about this job. Management accountants, I want us to create this job, but I want us to make certain that we make money. So there are costs associated with this job. And we need to know what those costs are so that we can better price it, so that when the customer comes to us and say they want the job done, we can say, this is how much it's going to cost us, considering all the fixed costs and the variable costs and overhead costs associated with that, and possibly some profit. So knowing what that is, what is a job? Now, organizations use a job sheet in the same scenario with regard to our job costs for our carpeting for Lowe's, me being a consumer and Lowe's being the customer or the client, or the organization that's going to provide this job for us. They will track it. They use a job sheet as well. Their job sheet obviously is electronic, but that job sheet is going to tell them all about what's happening, because they need to show on their accounting records, we have a job for XYZ. They're going to install carpeting 1,200 square feet of their house. We're going to use this product. We're going to use this material. We're going to have all these different type of materials so that we can lay the carpet correctly with the padding and all those kind of costs, and then the labor associated with it. We're going to know how much costs, how many hours are we going to use, or how many hours are we going to need. Job costing. And that's just for that. A job cost can also be a manufacturing. I'm going to create this car, this customized car for my customer. And they want this thing, they want that. So they're going to create it on a job sheet, which is most certainly going to be electronic. This is what we're going to do. This is all the materials that we're going to need. This is how it's going to get done. These are how many people we need going to have do it. These are materials and all of that. It's going to be that account. And when they create this car for us, this job, because it's unique to this client, they need to make certain that they have a subsidiary ledger account that's specific for this particular job. They need to be able to have costs put into this particular account so they can track it and apply it to a job. So let's talk about that. So again, you need to know when there's a job, you're going to have to make sure that the job is going to be on a job sheet. You're going to have to set up a subsidiary account to collect those costs. And then we're going to have some method by which to summarize those costs. Again, accounting always seems to mix in financial accounting. So if we want to have a cost accounting system in place for a specific job, we are going to be assigning costs to that job. So if we use a process of, we're going to manufacture furniture or manufacture a automobile, we are going to make certain that we have costs tracked and costs assigned to that job, so we can make certain that this job costs us this much money and this is how much we have earned on that job. Profitability is important. How do we price a job? Well, we need to have a good idea how much it's going to cost us to do the work. And that's what we do here. So how do we analyze the cost? We just talked about that. Again, if it all depends. If you're talking about from a managerial perspective, you're talking about manufacturing something from scratch, meaning using raw materials, or you're taking something that you have materials already and just doing the process of a job, meaning installation and all of that, and all the materials associated with that. So again, you might have direct materials and you might have indirect materials and overhead, or you might have raw materials. It all depends. So if we're assuming that we're creating furniture from scratch, we're going to have to get some raw materials here. We're going to have wood and nails and all of that sort of thing. So we purchase our raw materials. We get all the raw materials that we need. We need, again, indirect materials we're going to have to also deal with. And again, when we're going through this process, we buy the raw materials, but then once we started working on it, what happens to it? It goes right to our work in process account, and we do that process. And again, cost by job, not in total, but by job, because again, we're talking about specific costing for a specific job. So we need to make certain materials that are relevant to that job, but in the direct materials, indirect materials, and the labor, as well as the overhead, all attributable to a specific job. And again, here we are, the labor side of things. And again, you already know this. So think logically. I have a job. I am creating this furniture for a client. I have to consider my direct materials. I have to consider my indirect materials. I have to consider all of my overhead costs. And I have to make certain that those costs are specific to a job and applying them as such, so that we know how much it costs every job. The total cost is going to include the fixed costs and the variable costs. So, and here we are. And again, when we're talking about manufacturing, inventory has more than one component. We don't just have inventory. We might have merchandise inventory if we're talking about a merchandising firm. But in the case of this costing, we got to consider work in process as an inventory account, very specific, very individual, and very separate. Then we got to talk about our direct materials or raw materials, if you want to call it that. Again, it all depends on the orientation. But again, direct materials, and we're going to talk about finished goods inventory and how these costs flow. But they don't flow in total. They flow specific to a job and applying it to a job, because we want to track costs based on the job and not on a process, not on how we get through this process to work on another process, to work on another process, and ultimately get to finished goods. We're going to talk about job. Here's our job. Here's my materials for that job. Here's my labor for this job, and here's my overhead for this job. And in total, here is my total cost. Now, again, these are all accounts that are going to show up on the balance sheet. But again, when we're talking about the 3 inventory accounts, it's very important to note that for jobs and work in process, they are very specific to the job. And here's another way of looking at it. Again, when we are talking about managerial accounting and financial accounting, how they're different, this is one instance where you'll have to see where the managerial accounting flows over to the financial. Because look, the journal entry is clear. We're debiting our materials because we purchased them on account. And we're going to record the payable, the obligation to pay our vendor for those materials. Again, same logic within accounting. We do it on the managerial side, but again, financial accounting most certainly will need that information, so it will automatically flow over. In my personal experience, when I was using our managerial accounting, we were working for EpiPens and we were designing EpiPens, etc. One of the things that we had to consider is one side of it almost always is going to transfer over to the financial side of it. And we have to see how those two types of financial and managerial are linked together. So although we're not focused on GAAP accounting, we don't necessarily have to lay financial accounting or the principles of GAAP to the side, because then you see in the previous entry, this entry follows GAAP accounting. It's a double entry account, right? It shows both accounts, debits and credits, they equal, so the entry balances. So although we are not so much confined by the use of GAAP, we still use it as a means by which to track and record costs. We still use that. And in this case, that journal entry that we're recording has a direct effect on the financial records of the organization. And it's important to see how these two different entities work together in creating honest and accurate financial information, but also useful information for managerial and cost accountants like yourself to create an avenue by which we can say how we are allocating costs, how much it costs to produce, and profitability by job. So we're still following accounting. We're not abandoning it completely. And that's important to note. Again, all we want to make certain we do is we're trying to ensure that it's clear that when we have these subsidiary accounts, these little sub accounts, that we have them segregated by job. And as you can see here, so we have this really big overhead account or this big account called inventory, but in these sub accounts, we have the subsidiary ledgers that specific to each job that we're accounting. Why? Because we are tracking costs by job. It is important to note that. Overhead is another issue. Again, how do we deal with overhead? Overhead is a big, big, big problem if we don't know how to accumulate those costs and how to appropriately allocate them to specific jobs to get a true measure of how much a job costs an organization. Now, as we mentioned before, overhead is going to always be the indirect costs, indirect materials, indirect labor, utilities and rent, and other costs that are not necessarily attributable to a specific job. They always occur. They have to be done whether they have a job or not. These are our fixed costs and they don't change. Very, very important to note. In some cases, they don't change. I mean, we might have some costs that change just based on the volume of our purchases, but in the end, they're indirect. And that's really important to note here. And this is just giving you how it looks. Now, when we're talking about job costing, we're talking about how can we price a job? Well, the answer is how do we track the costs associated with that job and how do we allocate the overhead? That's the answer. If we want to know how to price a job, we need to know what the costs are and how to estimate what those costs are and how to apply overhead appropriately so that we can get a true figure of how much it costs us so that we measure our profitability or how we price it to our client. We can say that our cost of goods sold is this number, our revenue is this number, and the difference is our gross profit. And that's basically what we're trying to do. So again, overhead is a big deal. How do we allocate our overhead costs? How do we do it? How important it is to allocate costs. As we mentioned in previous chapters, direct costs are easy to track. Direct materials are easy to track. But what's difficult is the indirect costs. And how we allocate that cost has to be truly thought through so that you cannot fall into the trap of over allocating overhead and causing a job to be unprofitable when it really is profitable, or vice versa. So using the predetermined rates, again, they are completing the job, and again, preparing financial statements, we really need to have that because we need to make certain that our job is completed, our job is accurately costed, meaning the job accurately reflects all the costs associated with its completion, period. So as we think about that, make certain that it's very important. Overhead is a big deal. Overhead is allocated to jobs. And how they allocate it, it depends on what they use as an allocation base. And in this scenario here, we're using direct labor. Now, not always direct labor is the way to go, but direct labor is a good indicator and a good rate to use if you're trying to allocate costs on a global scale and you think what's going to be the most reliable number to allocate costs. If you're thinking about a labor-intensive process like manufacturing furniture, direct labor costs might very well be the best way to allocate or to use as a predetermined rate of allocating overhead to a specific job. But these costs and these allocation methods should be evaluated and looked back in the previous year to make certain that they're still relevant and still useful. So in here again, cost of jobs, again, we know what our direct materials are, we know what our direct labors are, but the question then becomes, how do we allocate our overhead? Because we want to have our total cost, our calculation. And our total cost is the equivalent of our fixed cost plus our variable cost. And our variable cost will include our overhead, as you know. So now, again, we're talking about here are our entries. This is all accounting. So the main point I would like to make in this particular scenario is we never lose our accounting in all of this. Accounting is always going to be something that you're going to see maybe in the background, but you're going to always have your accounting. And the most important part about this particular entry is how it is segregated based on job and how it was clear each and every transaction. We're isolating the job. We're not just using cost of goods sold. We're using cost of goods sold relative to a subsidiary ledger account called job 12-02. That's important to note, and what differences that you'll note that you will see in this chapter. You'll see more journal entries in this chapter, but these journal entries are going to be very, very clear and very, very specific to jobs when we're recording the flow of cost from one process or from one job to one process to the next. When we're moving from work in process to finished goods, we need to be clear. It is job such and such going to cost of goods sold for job such and such, or we're moving out of finished good, we're taking it out of finished goods for job XYZ. And that's really the most important thing that you'll see here. And again, these journal entries, again, are just giving you a visual picture of how things would look once those transactions and entries are completed. Here is a job cost sheet. Now, again, for most organizations, everything is electronic. But if you can note, however, that the characteristics of a job sheet is this essentially the same. It's going to talk about the job, when it starts, when the expected date to end, and basically what the job is, a description of that job, and it will outline the materials and the labor and the overhead and gives you a total cost sheet. Now, we're using this technical this textbook to give you an idea of what a job cost sheet is, and that's not necessarily what I'm trying to get you to see. What I would rather you see is the essential components that make up a job cost sheet. That's it. How it's laid out really does depend. And here we use that information to create our method of tracking costs by job. Now, they have two overhead accounts, manufacturing overhead account and applied. What are the differences between the two? I want to sit here and wait and let you think about it. There are two accounts. One is a manufacturing overhead control, and then one is the applied. So what happens is that the number one, in my opinion, I'm going to call it the dumping. You dump all your costs in that one overhead control account. And once you are allocated those costs to jobs, you have essentially applied it. So costs are going to be dumped in the manufacturing overhead control account. And when they are actually applied and they're moved and applied to a specific job, that's going to be your applied overhead. And that's going to become an important measure as you proceed in this chapter. And here it is. When you over allocate or over apply overhead, and you under apply overhead, and what happens when you do? How do you create, what impact it has on the income statement? And so it's important to see that as well. And you're not going to know that until you know all your costs in your overhead account, your control account, and how much you actually apply. In this case here, we have an under application of overhead. Why? Because we have accumulated $51,000 in costs, but we only applied $49,000. So the control account is larger than the applied account. So we have under applied overhead. So at the end of a period, in this case, end of the year, we're going to have to remove that under applied overhead. And where does it go? Well, there it is. It goes into your cost of goods sold. So, and the point here is we are not going to always apply all of the overhead. There may very well be cases when we may over apply or under apply. And when we do, what happens? What makes it over applied? That's what you need to understand. What makes it under applied? And understand that. And then what do you do when you have that over or under applied? And how does it affect the financial statements? So it's very, very important information. This is not a very difficult chapter, I think. What I think more important is we are applying costs to a specific job. We are recording those transactions, and we're using subsidiary ledger accounts to track them specifically by job. We are recording our costs. And we're applying our costs First, we're tracking them in a control account. So we put all of our costs in this control account called overhead. And then when we actually apply those to a specific job or jobs, we apply it. And any difference between the control account and the applied account is going to be our over or under and how that affects cost of goods sold. And that's essentially what's happening here. Think about all of that. Now, normal, actual, and standard. Again, standard costing, we will talk about that, I believe, in chapter 16. But right now, just know what it is. Don't worry about it too much because we're not going to get into that right now. But it's basically introducing something that we're going to talk about later. And a very interesting chapter indeed. But know that. So as we continue in this chapter, understand that service organizations also will be using job costing, because if you think about a lawyer, if you think about accountants, you think about doctors or anybody who provides a service and they want to be able to track how well they're doing with specific patients or specific jobs, they use job costing as well. Accountants use it all the time. Every single job that they have, they track them by job and how many people they're going to assign to that job and how much overhead that needs to be applied to that job based on work and experience. And they can give an idea. This particular job was profitable and we were able to attain our 10% gross profit margin for that job. They can tell you that with accuracy because they track their costs accurately by job and they apply those overhead costs consistently based on their experience. And that's important to note. So not all job costing is going to be in a product manufacturing. It may very well be in service organizations, and contracts and jobs very well be. I have an audit. They could be a job called the name of the client XYZ, client JKL, client such and such. Each one of their clients could very well be a specific job. At the end of the day, job costing is very similar regardless of its product natured or something tangible, or if it's a service, an intangible. So understanding the ethical issues, don't misstate how much you've done. Charge your jobs appropriately and have controls in place to ensure accuracy is maintained so that no job is being costed inaccurately, so that it will give you misleading information. And also don't misrepresent, meaning don't say that it's going to cost you $50 to do it when it's actually going to cost you $150. Be honest, be fair, so that you can actually help the organization achieve its directive. So now projects are more long-term, I would think, and this essentially is more long-term. And I would think the most important thing to make the distinction would be jobs are more short-term, projects are more long-term, and tracking them requires a different set of understanding and different types of more detailed analysis, so that you will not only know what happened in this year, or you'll know second year, third year, and accurately project the cost for the final year of that project, so you can know that you've made money. And that's very relevant to construction contracts. This chapter is not that hard. It was easy for me to get through, but I think what we'll do with this chapter is I will give you another small, maybe 2-3 minute video just going over how to accurately cost jobs, and also giving you an idea what it looks like to job costs within a service organization. Thank you very much for your time, and I really appreciate it. Take care.